All right, Crypt Nation, we are back with another great guest here at the Crypto Hedge Fund Summit. Me and Aaron, we've been going all day, all night with these interviews, and we are so excited to get the insightful advice and wisdom here from Nico Cordeiro, who is the Chief Investment Officer of a beautifully run company called Strix Leviathan. Nico, welcome to the Hedge Fund Summit.
Thank you. Appreciate you having me.
Absolutely. So Nico, real quick, high level, what's your background and how did you come to, start dominating the crypto industry?
Yeah, so a little bit of interesting background. I actually spent my 20s in the military, so I was in and out of the Middle East. Decided I didn't want to do that for the rest of my life, so I got out of the military and immediately started working in private equity, so buying up small B2B service businesses. From there, I went over to a company called PitchBook. They do private market data on venture capital and private equity. While I was there, I was doing research on private equity. Personally, I'd already been in crypto for a few years at that point, so I was trying to convince the leadership at that company to let us do some crypto research. And I had a buddy of mine who worked there who had already started writing about Ethereum and Bitcoin. We spent 2017 trying to get people on board for a crypto research product to go along with the VC, the venture, and the private equity. Towards the end of 2017, the whole world discovered crypto, and suddenly there was interest from Morningstar, which was PitchBook's a subsidiary of, and everybody was like, okay, well, are we going to do something here? What can we do? Myself and my buddy named Evan Morris, we started kind of put together a plan for what that data and research product would look like, along with an SVP over at Morningstar. But it didn't get very far. I quickly left and went over to Strix, and I've been here for the last 2.5 years doing this.
Very cool. That's awesome. So besides Bitcoin and Ethereum, what is it that excites you about crypto right now? What do you have your eyes on over there, if you can share?
If those two things even excite you. They don't excite some people, so.
What?
Yeah, so it's been a while, and we can talk about it. It's been a while since I paid attention to the smaller market caps. We focus largely on large cap. I'll say in general, what excites me about crypto, the technology, is this kind of moving away from centralization, the censorship, resistance, capability that we have here. You look at yesterday, I think news came out that Reddit, censored a bunch of people. China's constantly censoring different groups that they disagree with. I mean, and I'm getting specifics here, but generally speaking, I see an opportunity to kind of disperse that power of the internet across, users, rather than, these gateways that control the internet.
No, that makes a lot of sense. I think that's what, what a lot of people really was the main pull factors. You see these, centralized databases get hacked, or you see these, these powers, these centralized powers, right, that corrupt all the way to the core and just makes, all the way up to the Fed level, right? And that's where a lot of people got in here. But, kind of going back to your guys' investment thesis at Strix Leviathan, tell me a little bit about that, the nature also of the investments that you guys make.
Yeah, so we're purely systematic, quantitative driven. We largely focus on, markets that are liquid enough. We're less concerned about fundamentals, although that comes into play just when we're trying to protect our downside. A perfect example of that was Bitcoin Cash this year after its halving. You got that, oddities going on with the mining. We saw some, at least the rumors were that miners were gaming the difficulty algorithm. So we stopped trading that until Bitcoin's halving, occurred, and we saw that kind of blockchain activity die down. But other than that, we don't focus on fundamentals. So strictly whatever's liquid enough for us to trade, we'll trade it.
Can you tell me a little bit about what a quantitative strategy looks like? I know there are multi-factor models with, hundreds, if not thousands of different variables, but kind of could you reduce it down to what a strategy typically entails?
Yeah, sure. So, I mean, I see a lot of similarities between these markets and traditional commodity markets. So there's a type of, asset manager out there called commodity trading advisors. They've been, trading commodity futures, since the 70s or earlier. So we run a lot of CTA style strategies, as trend following, cross-sectional momentum, short-term price shock, things of that nature. So we're not trying to value these assets. We're not making bets off valuation models. We're more of understanding what market participants are doing right now and what's most likely going to happen next.
It makes a lot of sense. I think there's a lot of people listening right now that feel like if they don't make a trade every day, they're not actively managing their money. And they always want to pull the trigger on something, somewhere, somehow. For a quantitative trader, where does patience factor into that algorithm?
Yeah, so we do trade often. I think our medium hold time is between 2 and 11 days, depending on the algorithm. So we are trading pretty consistently. I think the patience from a systematic trader is just sitting idly when you go through these periods where it just sucks, for lack of a better word, right? Like every system has its flaws. Every system has its own risks. There are certain market conditions that don't do well with the type of algorithms we run. So the patience there is really just understanding the dynamics of what you're running and understanding what those bad periods look like, and being able to separate a bad period from an algorithm that is actually doesn't work, which is more difficult than it sounds.
Yeah, it sounds like it. So a lot of people that are watching this are what we would call, or what, people generally refer to as Main Street or retail investors. And you're on the other side where you're the shark and we're the fish. So I want to impart some wisdom onto everybody who's watching this. And I'm not sure really how I'm going to phrase this question. I'm just going to come out with it. But how do we, a lot of these people, myself included, we've made trades based on emotion sometimes. How does a guy like you take advantage of people's emotion?
Yeah,
right?
that's an interesting question. So at first, I'd say, smart money or institutional, whatever you want to call it, they make emotional mistakes as much as anybody else. I think for us, it's really trusting the system, like understanding, like going deep enough within our system that we understand how it works, when it doesn't, why it doesn't, and being able to, just have patience, honestly, with the system, not necessarily not trading every day, like you mentioned previously, but just letting the system play out. On a month-to-month basis, we know that our system can underperform, right? Like our tracking error can be pretty high. For a lot of asset managers, that's terrible, particularly in the traditional space. But over a long enough time frame, you get this really much better risk-adjusted return than what you would get from buy and hold.
How do you define success over there at Strix Leviathan? Are you trying to keep pace with the market or beat the market by a certain percentage? Or what kind of things do you look at where you can sleep well at the end of the day?
Yeah, so we're looking for greater risk-adjusted returns with a lot less downside. You could think of it as that we try. This is a very high level, but if you try to think what our algorithms are doing, we're trying to figure out when to go to a beta of 1 on the market and just run with the market, and then figure out when we get out. Right, avoid those downsides. We see the most important factor in this space is largely avoiding drawdowns, and the wins will take care of themselves.
Yeah, really well said. I think, everybody who's watching now, if they're not using stop losses, you absolutely should, because all that volatility could really knock you out of play. But I want to go back to 2017. You were trading the markets, you were, starting your fund, all that kind of stuff. But now it's 2020, deep into 2020. It's been a hell of a year, if I do say so myself. But I want to know a little bit about what you're seeing. Two-part question, really. What kind of infrastructure has developed that wasn't there in 2017 that you're like, fuck, now this is like here, this is making my job so much easier. But also follow up, what's missing, right? What's still to come that that in the traditional space you have, but now you don't?
That's a great question. So on the infrastructure side, I think what makes our life easier is the rise of electronic counterparties, right? So we trade a lot with OTC desks. A lot of these OTC desks, when we first started at the early 2018, none of them had an API. So we're very software driven. We had an API from day one, but we couldn't use it with anybody, right? So we get into these Skype channels and be like, hey, can I buy X amount of Bitcoin? And like all this was done over Skype and email, right? So not exactly like the secure Bloomberg style of the traditional markets. But today we can access our counterparties, exchanges, and OTC desks all through our software platform. So that has made my life a lot easier.
What else is there that you feel like, fuck, I need that one next little thing just to push us over the edge?
Yeah, I mean, technically speaking, I'm pretty content with where we're sitting. What I want to see is inflows. Everybody's been talking about the institutions and the traditional folks coming since, I don't know, like 2014, 2015. We still don't see it to a huge degree. I mean, there is some, mostly, very forward-thinking family offices. We do know of some endowments and traditional pensions who are going into VC funds who invest in cryptocurrencies. But as in terms of like active traders, speculators like ourselves, like there's not a ton of institutional inflows that we're seeing.
Are you starting to see any of your old friends from the private commodities market making their way in or sending you a text after 3 years saying, hey, I just started getting into crypto?
No, I haven't, but I will say whenever somebody who's not in crypto contacts me, it's about XRP, and I cannot figure out why.
Oh, God.
That's the cryptocurrency everybody who's not in crypto constantly asks me about. I'm like, I don't know why that's the one you go to. I mean, I would not buy and hold that, but to each their own, I guess.
Yeah, that's one of those ones that we interface with a lot of people that are just coming into the market, crypto curious, haven't even bought their first crypto yet. And I have the same sentiment, is that everybody always asks about XRP, or they ask about Ripple. They don't even know what XRP is. They ask, what's Ripple? I'm like, well, you have to differentiate between Ripple the company, XRP the token, and it's just a whole long conversation. But yeah, we don't necessarily touch it or get into all that kind of stuff. But interesting that from your side.
Here anyway.
Well, tell us one trend that you're really looking for. A lot of people have been talking about DeFi. You might find it interesting, you might not. But besides DeFi, tell us one trend that you expect to see continue maybe playing out in 2020 really strong, or it's maybe just starting to hit its inflection point in the crypto markets.
Oh, yeah, that's a good question too. So we don't mess around with DeFi too much. I mean, we'll trade the overlying assets because they're tradable, and that's what we're looking for. In terms of trend in 2020, I think I'm interested to see ETH 2.0 and how that rolls out. Right, like I mentioned early on, I think there's a place for decentralized, censorship-resistant currency, and we're seeing that play out with Bitcoin getting a ton of attraction, and then some other more private coins that are also gaining some traction this year. But I'm also very interested in seeing that type of Web 3.0 play out. I know after 2017, it has a bad reputation. Everybody talks down on the altcoiners or whatever it is, but I would like to see some progress there. And I think right now it's highly dependent on how ETH 2.0 turns out.
Yeah, very well said. So this is one of our last recordings of the summit. We've been at this for like 2 months now. But this is good because we're on the last day of Q2. This is June 30th. What are you seeing in terms of market conditions coming up for Q3? How have you guys prepared yourselves for the beginning of tomorrow?
Yeah, interesting question. I mean, I think in terms of being prepared for tomorrow, it's just the system that we've built that we continue to iterate on, that we continue to add to. We focus, we think about this more as, a betting game, right? Like a blackjack. Figure out when you have an edge and bet when you have an edge. Don't bet when you don't. So like for price projections, I'm not the type of guys who can really give you one. I think that there is more bearishness to come, but I'm happy to admit I have no idea what happens an hour from now, let alone at the end of Q3.
Okay, interesting. 2 questions actually that made me think here. The first one is, so you said general bearishness, perhaps more to come. Is that because of any sort of correlations that, are very evident between the crypto as a risk on asset and traditional stock market risk on assets? Or is it something more maybe fundamental to the crypto markets that you're thinking about a little bit of bearishness?
Yeah, I think the inflows that we have seen just don't map to the returns that we've seen this year. And I don't have them in front of me, but I think ETH is up like 80%, XTZ is up like 120%. Like this, early 2017 style returns. So maybe we're at the beginning of that that type of speculative cycle, but I just don't see the inflows and the new attention that would make that, persistent or at least stable.
Yeah, it might not have like really that staying power that you think it should.
Right. If you think about like early 2017, January, I mean, nobody had heard about crypto other than like, the handful of people that were in the space. By the end of 2017, like Forbes was running articles on it, right? Like, so
Uber driver. I remember one time I had an Uber driver that was driving a Tesla and not playing, but literally on BitMEX and picking me up on Uber. I was like, this is the top. I got to sell it all.
Yeah. So, I mean, again, this is all qualitative. I'm not saying that we're going down from here. I'm just saying, like, generally speaking, I don't see that burst of excitement, that the new people flowing into the space in the same degree that they did in 2017. But, I could be wrong there.
Yeah. One of the last questions I get to before we are asking a question that we're asking everybody. So second to last question is about this open interest that had just expired on June 26th. It was the largest open interest that has come to expiration in crypto in history. I think it was over $1 billion for Bitcoin and some really high number for Ethereum, maybe another $1 billion. But could you tell us a little bit about, what open interest is, why it matters, or maybe perhaps why it doesn't matter? Is it a MacGuffin? And kind of what was happening around that time?
Yeah, so we're like a quantitative asset manager. We don't play around too much with derivatives, although it's on our list of things to explore. Because there's so many. This space is so evolving so quickly. As far as the open interest, I mean, you're really just looking at open contracts, right? And we've seen from the beginning of the year, there was a lot of news about Paul Tudor Jones joining. Some CME interest has gone up. I mean, but you got to put these numbers into context. Compared to the traditional markets, there's still nothing, right? You have equities.
It's a pimple compared
Yeah,
to
you have individual equities with higher market caps in the entire crypto space, right? So like us personally, we don't look at OI as predictive. We don't really play around with derivatives. So for us, it was a non-event.
Cool. Makes a ton of sense. Yeah, I appreciate all that insight. And the last question we've been asking everybody, and it's kind of funny. We have a funny story behind it because we were originally going to call the Crypto Hedge Fund Summit the Smart Money Summit, because we thought, hey, we're going to get funds of all different kinds. So let's just ask them to you, right, Nico? What does smart money mean to you? What is smart money?
Yeah, that's a really interesting question. So I don't know if I draw the line of smart money from institutional to retail. I think there's plenty of smart retail traders out there. I think smart money are those people that go out and systematically test what they believe in, right? Like, Twitter's, a very popular spot for cryptocurrencies. I'm not very active on Twitter at all. But, when you are on there, it's a self-designed echo chamber, right? So like if you already believe Bitcoin's digital gold, all Twitter's going to do is give you reasons as to why it's digital gold. So smart money to me are those people who can recognize their own biases and go out and test them, right? And confirm or deny what you actually believe is the truth. I will say, since I've started this role, one of the things we do is we basically go, okay, what is popularly believed on crypto Twitter? Can we go and validate it quantitatively? I will say a huge amount of things that people believe are either quantifiably false or cannot be quantified. So, for smart money are those people who go out and actually test hypotheses.
That's amazing advice. Everyone, stop listening to crypto Twitter. You'll be much healthier for it. Nico, thank you so much for spending the last 20 minutes with us. We will be right back with another great guest.
Appreciate it. Have a good one.